Morning, everyone. Morning, morning, morning. How are we doing today? On your way to work. Nice. Anyone got any trades on the go? Hey Joe, how you doing? Hope you're feeling better. Right, we'll go over some charts from the watch list and see what's kind of happening. So AUD CAD is bounced off of that daily area of demand that we were talking about, and like I said, my overall perspective is for price to continue pushing higher, but for now we have the current downtrend in this pullback still intact. You know, you can see we made lower low, lower high, lower low. So off of this demand, we were looking at trading a pullback at least back into this area of supply where we have this inefficiency and imbalance. Better thanks in AU at the moment. Oh, nice. You in shorts? It'll be nice. Share your link to your chart in the chat if you can, Joe. I'd like to see where you got in. So yeah, we've got this region, but price is very choppy. You know, because markets are closed and everything. It's just there's no real entry in this at the moment. You know, it's very choppy price action. So for me, really, there's no real trade as it stands. I want to see some nice structure forming. If we can see some structure form here, then we could look to continue buying this back up. I would at least need price to somewhat pull back into an unmitigated demand zone, which is probably over in this region here. We have some liquidity here. We have this inefficiency. If we can get price to kind of head back down here, we could see some buyers back to the top side. But until that point, there's not much going on in here. You're in CAD CHF. What, you in buyers or sells? So S&P 500. This was a key area of weekly, daily, I believe it was. Yeah, this is a daily area of supply up here. That's where we can see we're reacting from. But for now, there's no longer term shorts in this back down into this region, because on a 4-hour, you can see we had a 4-hour breaker structure just over here. So right now we're just in a 4H pullback, fill out this inefficiency. So if we look at SPX 500, we can see, you know, there's probably some short opportunities in S&P 500. If we mark the high to the current low, if price kind of heads back up into 44.52 into this area of supply, we could see some nice continuations back to the downside. And there could be a nice trade opportunity to at least fill out this inefficiency here and mitigate into this. So take some partials here and then even let the trade run further. Because if we look at the 4-hour, let's mark the low to the high, we could see price heading back down to 43.6 60, 43.80 kind of region. So there is some nice short opportunities, and you can see sellers have taken control. We got some strong momentum coming in, got some clear levels of inefficiency and imbalance. Now for me personally, this area of supply is early inducement. I would personally expect price to probably come back here, see a reaction, sellers get involved, price continues higher, mitigates our key zone, and then we start to sell off. So S&P's setting up now, and you could see we had this pullback and then we had this push up. Price came into demand, failed to break supply took control, and then now we're heading off to the downside. Now AUD USD, I'm in AUD USD myself, so that's why, Joe, I was asking where your entry was. Now I got in slightly, I was expecting price to come in slightly higher, and if price does push up from here, I'm not going to close my first position. I'll keep it running and I'll just add into it. But AUD USD, I'll kind of cover my entry and the entry reason for this. So we can see with AUD USD, we're in a 4H pullback. We had a 4-hour breaker structure just over here to the top side. Price mitigated the weekly pullback zone into this kind of region here, and we shot off to the top side. So overall, I'm expecting overall bullish price action. But overall, before that, there's more downside, in my opinion, for price to fulfill that 4-hour pullback into this area of demand and discount. Whether we come into like 0.65, 600, or we come deeper into this unmitigated demand zone, we'll need to wait and see. But there is still some downside, and as we were creating structure, we created this low, we had this pullback, we created this low. So as we tapped into this, we were expecting some downside. But what we haven't seen yet is we haven't seen lower time frame shifts. So you can see all of this was the pullback back to the top side. So this was the retracement based off of this breaker structure over here. So once we got this, you could see we've had a perfect pullback where we've had internal structure forming nicely. We had higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We mitigated our key area of reversal, which is that area of supply. Hi Whitney, happy birthday to you. Hope you have a wonderful day. So we now mitigated this area of supply at the top, but in order for me to have more confidence that we're going to come down and sweep these lows and continue pushing lower, we need to see this low get taken, internal low get taken. But what was the trade idea here? Now again, you know, entry slightly early, and I'm fine with it. I'll accept it. You know, I think there's probably a chance that price could do this and tap into this and then come down, which if it does, I'll scale in a second position. I'm fine with it. It missed originally. I was expecting price to tap into here, didn't come quite as high. As soon as I saw a rejection, I got involved. I'm pretty fine with it. So yeah, so why did I enter shorts, this short position here, if the internal structure is still bullish? Because we're in an internal M15 pullback. We're in an internal pullback, which we had an internal breaker structure to the top side. So we have this low, and then we had this high. We mitigated our significant supply zone, and then you can see we shifted bearish. So we're now facilitating the M15 pullback. Well, the M15 internal pullback. So you could now see, if I mark up the low to the high, we have the 70 to 79% here. We have that clear level of imbalance on the M15 time frame, and we have this area of demand. So the likelihood of price, where's it headed? It's headed down towards here before it potentially does this, or if it gets a reaction off of this and then rolls over, then we can start to look for more downside, because this pullback has come to an end because the internal structure shifted bearish, and then from a higher time frame perspective, we can then start to expect price to sweep this low and create a new low, working its way down here. So hopefully that makes sense. So it's super important to understand if you're trading, why you're trading, where you're trading, what's the purpose of it really is. So yes, this is playing out nicely. So I was waiting, like I said, we have this area of supply up here. I was waiting for price to come into this region. Now, as it came up here, rejected, I waited. As we had this weak bearish candle, we then had, as we had this rejection over here, you know, we marginally missed my zone by like a fraction of a pip. You can see not even 0.6 pip off a pip. So I was pretty happy to get involved there. Originally I would have been covering the highs, but then as we started to move into profit, then I'm fine to just tighten my stop loss and keep my entry there. So now you can see we're perfectly now facilitating our pullback, and this is where it's super important to understand structure accurately, you know, because so many people would sometimes see this, oh, we made a lower low, lower high, lower low, oh, we've had a change of character, we have demand, I'm gonna now start to buy. But no, this isn't really a pullback, you know, this is still part of this push to the downside. This is just a, you know, internal consolidation. This is the actual retracement before we then get the next leg to the downside. So again, having a defined set of rules on how you read and perceive structure is super significant and super important when it comes to reading the markets. Now again, until price doesn't actually break this low, close below this low, price could absolutely still come in deeper and mitigate this before coming down. And I accept that, you know, when you're getting involved in a trade, understand what you're getting involved with. If you get involved earlier, understand the risks, understand where your trade becomes invalid, and why you're taking it and what the reason for it is. It's not just, oh, the daily trend is bearish, so I'm going to look to take a trade. No, there's got to be more involved in that in order for you to be looking to take an entry. You know, you must have a criteria and a set of rules that facilitate your entry model. So yeah, that's AU. We'll leave that alone. CAD CHF. So again, CAD CHF for me, you know, it's still sideways. You know, as I had said previously, we came into this daily area of supply. I'm expecting upside, but I was expecting this supply to be a reaction point for price to come back and fulfill this pullback, for us then to see the next push up and for price to fill out this inefficiency that's resting below over here. Now on the lower time frame, you know, we can see, what did price do? Price came down, had a push up, and then we had this change of character to the downside, and then we kind of came up and just created all of this liquidity. We swept it above, and then we've just been ranging sideways. For me personally, until this low isn't taken, I'm not interested in trading this, because we are just pretty much moving sideways, and there's nothing really telling us. We created this high, we created this low, and then we've kind of been raging. So for me, I would like to see a breakout of this, then any kind of pullback, and I'll be comfortable in trading this back down to 0.6550000. You can see we are pretty sideways. So on an intraday, there could be some moves from within supply and demand, you know, but you could see it's just a ping pong game. We had demand over here, price tapped into it, came into supply caused price to push down, we came into demand pushed price back into supply pushed price back into demand pushed price back into supply. So it's just like no one side is winning, and that's where you get the sideways consolidation coming, you know. So it's super important to be mindful of that. CAD, JPY. So this was the key area I was looking at shorts. But again, for me personally, I would like to see some more downside pressure before we start to get some shorts in. You can see prices failing to close above this region, you know, so we've got lots of liquidity. Now sometimes you'll see people see this and be like, oh, we got resistance, let me just short into it. But there's loads of liquidity here now. There's nothing stopping price from wicking above, sweeping liquidity and then coming down, and no structure is kind of shifted yet. So you can kind of see, you know, the last push that we really had was this push above, or we had this push above, pull back, we had this push above, price came into demand and then kind of been sideways. So we still have this area of demand that hasn't yet been tapped into. So I'd like to see is at least price coming into this, react into supply, and if we then see failure at supply, we could then look to start shorting. But until that point, there's nothing there for me to trade, and that's where the discipline needs to come into it. You know, got to be super disciplined to not just jump in on a trade. Now Euro USD, so Euro USD overall we are still higher time frame bullish. You know, we had the daily pullback. Daily pullback was complete and then we shot off to the top side. So after this big expansion to the top side, we've entered a retracement phase. Now we can see price mitigated this area of demand and then kind of bounced off, but technically we are still internally bearish. Lower low, lower high, lower low, lower high. You can see we perfectly came into that, and now we're coming back into this region. Now where is price reacting from? Price is now reacting from this area of demand. But remember, this demand never caused price to break above a high, so internally we are still bearish. Now do we come in deeper? Do we come in further down into like areas of demand here that are unmitigated to facilitate that 4H pullback? We could see that. You know, we could see price still fell below and come in deeper before we see the next push up. But right now we are kind of in no man's land. You know, you could clearly see, what did we have on a 15-minute? We never closed above this. On a 5-minute, you can see we wicked above. We had a break below here. So the way it seems right now, you know, we have an area of demand here, which price is working its way towards. So I would still be more short bias, price kind of heading back down towards here. But will I short over here? No, I won't short here, because price is already come to 50% equilibrium, and if anything, price has already come into that fib zone. So we could see shorts from here, but it's risky in trying to trade shorts from here. You know, when price was within this kind of region, it was higher probability of trading the shorts. It still is, because internally we are still bearish. You know, we failed to break above this high, which caused this low. The pullback was complete here. So price came to this extreme, and then now we've started to sell off. So the likelihood is price is going to continue lower from this point. So if anything, you know, shorts are probably valid here. You could see, you know, we had our Asian range, huge push up, sweeped the Asian range, and then we kind of came down, sweeped the lows, and now we're working our way back down. And this is where it's super important to not just overly aggressively get caught up in internal structure and be like, oh, where is price heading? Because all of these higher highs and lower highs and lower lows here are internal. Why? Because we had this huge expansion, we then had this push down, this wick above broke that high, so now this was the low, that was the high, so everything in here that happened was internal until it broke this low. So where did we break the low? We broke the low over here. So now that we broke the low over here, we can see, if I use my GAN box just to say, did we approach equilibrium? Yes, you could perfectly see price mitigated equilibrium, that 50% zone. We pulled back into the last unmitigated area of supply, which was here. And look where we closed. We closed within that 50% of that GAN box. So after we had an internal breaker structure here, there was our pullback. Now, if price did this, right, and this is where it's super important. So we're looking at price like this. We can see within this swing leg, so there's our lower low, there's our lower low, there's our lower high, and now we're heading towards breaking this low. Now within this, to facilitate this swing move to the downside, we're going to have a trend within it, and which is absolutely valid. So when price starts to do this, and we have a internal breaker structure here within this swing structure to the downside. Now when price has a big push up here, right, I'm just going to take this back slightly. So when we had this push up here, yes, we had a change of character here. But what was that change of character? That change of character came once we broke this internal low. So what are we now facilitating? We're now facilitating the pullback off of this impulsive leg to the downside. Now, if price from here came back into an area of demand, absolutely we can look to buy up into this area, because what are we doing? The change of character is facilitating the pullback off of this impulsive move to the downside. But that is it. It doesn't mean we've had a change of character here now. Oh, now price is just going to head to the top side. And this is where most people always get confused. They don't understand structure accurately. They don't understand what the higher time frame is telling them, and they just get caught up in the internal structure. But we never got that pullback. You know, you could see that pullback never happened. Price just went in, mitigated this, swept the liquidity above this high, but mitigated this last area of imbalance and this supply zone, and then from that point, what happened? Boom, we start to sell off. And now if we look at where price is, in my personal opinion, I believe price is now heading back towards the downside, because the pullback was facilitated. We've now mitigated. So this push up here was to facilitate the pullback off of this impulsive leg. So now realistically we should be expecting the next push down. Why? Because demand somewhat failed, because price broke through it, and overall where are we heading? Internal structure is still bearish. So what do we have? We currently have a strong high, and we currently have a weak low. So if we have a weak low, and internally we're still bearish, and internally we're still facilitating the 4-hour pullback from this move, then all time frames kind of align back to the downside. You know, so it's super important to understand these things. So if we're expecting price to continue down, then why shouldn't we be trading back to the downside, and at least trading into this area of demand, closing most of the position here, and then letting the rest run, because the likelihood is this weak low gets taken, and the 4-hour pullback, the 4-hour push to the downside, the 4-hour pullback is intact. You know, because where's our M15 structure? Lower low, lower high, lower low, lower high, lower low. But having the ability to read in between the lines and read internal structure, super important. Hopefully that makes sense. Come on, AU, can we just get down? Drop a thumbs up in the chat if that makes sense, guys. Right, let's move on. Hey, Marcia. Hey, Juggernaut, how you doing? Glad to see someone's awake in the chat. Sorry guys, let me know if there's a loud banging noise you can hear in the background. That's just my gardener who's just doing some work. So GBP CAD was another one that was on the weekly watch list. Now as we could see, we had a daily breaker structure, we had a push above, price perfectly came back into our fib zone. So I marked the low to the high, and then we started to push off. Now we had, as we were coming down, we had this kind of structure form here, and then we had a shift above. So price then came back into this region, missed the original entry there, but then we just consolidated sideways, so I wasn't really keen on getting involved with that. You know, we just had sideways. I was looking to see if price came back into this unmitigated area of demand before we saw the push to the top side. The way it is now, I'm not really keen on it, because for me this is lots of liquidity here. If price was to come down, if price did come down back here, I would be happy to get involved. You know, we've swept the liquidity above. Can we sweep the liquidity below, mitigate this region here and this imbalance? Then I'll look to get involved and continue pushing price up to like 1.7, which is a nice psychological area. Now like you, low time frame 15 and then 5 minimum. Is volume going to slump now? I think volume should pick up today actually. You know, the markets are back open. There isn't obviously a lot of news today. I think the only thing we've really got is FOMC meeting minutes at 7 p.m. my time, UK time tonight. So there's not going to be huge volatility with the lack of news. But no, I think we should have okay-ish volume. So yeah, GP CAD, not really interested. Just had that consolidation, then we broke above. Pound USD, similar thing on Pound USD. You know, we had a breaker structure to the top side. We have areas of demand below here that unmitigated. We're facilitating that pullback after the breaker structure. So you know, you can see here swing low, swing high. We're currently within that pullback phase. If we look at M15 structure and even higher time frame, you could see all areas of supply are mitigated. You know, this area is mitigated by this wick above, this supply zone is mitigated here, that supply zone is mitigated here. So the only unmitigated supply zone we had was here. So as price came into here, you know, you could see we had this internal breaker structure over here to the downside, and then we shifted above over here. We had a change of character here. Price never came back deep enough in order for us to get involved. and price left without us. We then had another internal breaker structure to the top side here. So currently price is in a pullback from this swing low to that swing high, but we are in a key area of the pullback being complete and price heading overall back to the downside. But we need some shift in momentum. You know, price is pretty choppy. It's just, who wants to get involved with a market like this? Not me, really. And again, we do have some areas of supply that are unmitigated up over here, so we really need to wait and see. GU doesn't look that great until, for me personally, until this low isn't taken, so we don't kind of see this. If we see that, so we'll just need to wait and see what GU does. Overall, I still believe there's downside. I still believe overall we have some, you know, we have areas below for price to continue down. As you can see here, we have areas of demand on the 4-hour time frame that are unmitigated. We have some areas of imbalance, so we could definitely see price continuing lower from here to mitigate this before we then see the shift, because below this price is pretty much efficient. You know, you can see we have demand zones here, but you can see these wicks into it, so price has already mitigated those zones. So this is the last zone here that hasn't been mitigated, and if we mark the low to the high, that sits within our discounted area. So patience, patience, patience. So USD CAD, overall we can see we have our current swing structure, which is lower high, lower low. So we had this change of character here. Again, same thing, we never got a deep retracement, but I wasn't really expecting it at that point because everything is efficient pretty much here. So now we're pushing above. So intraday there could be a trade opportunity if we pull back before mitigating this area of supply at 1.33200. There could be a nice buy opportunity here. You know, we have an area of demand created, so if we get something like this back into this, we could kind of see that. If not, then we could see some downside pressure from this point here coming into play. If we break above this, however, and then we get a pullback, then I'll be looking to buy this up into 1.35600, 1.35800 to facilitate that 4H pullback, H4 pullback. And then from this point, I would be expecting downside, because you can see loads of inefficiency, perfect area of supply, everything aligns well. But right now we have this hurdle, we have this strong area of supply for price to break through before we can see price continuing higher. So intraday, like I said, there is trade opportunity if price retraces. We have some demand created here. We could see price pull back into this to continue higher. And then once price gets here, I'm not really looking to short from here. You could if you personally wanted to, but it could be short-lived because we could be facilitating the 4-hour pullback. Why? Because we've had a 4-hour breaker structure, which is over here. So we could see the next push up for then the next move to the downside. So always remember, keep those in mind. You know, when higher time frame break structure, expect a pullback on that time frame. So if we're expecting a pullback on that time frame, then, and we've had this change of character here, then we should expect supply to act as areas of pullback, and that's it. You know, so It's about being mindful. It's not just about trading supply and demand in isolation. Come on, AU is playing off nicely. Now gold. Let's have a look at gold. So gold, there's a couple of things in gold to be mindful about. Now gold, you can see we had a 4-hour breaker structure here. So we had this last low, we had this pullback, and then we broke the low over here. This was our pullback, and then we had this move down. So now, because we had a 4-hour breaker structure, what can we expect? We can expect a 4-hour pullback. Now if we're going to expect a 4-hour pullback, what are we expecting on the M15? We're expecting the M15 to shift bullish, you know, to facilitate that 4-hour pullback. So if we just go back to the 4H time frame, and I'm just gonna, there's our 4-hour high, there's our 4-hour low. Our current 4-hour low. Right, so that's the range we're working within. Now within this range, if we just go back, so there's our 4-hour high. So we had a M15 breaker structure here, we had a pullback, we then had our next M15 breaker structure. Now price has reacted from this hourly area of demand, so it's a strong area of demand where we had this push up. Now overall, you could see gold is approaching that fib zone for the daily pullback. You could see we had a daily breaker structure to the top side. We had that daily break here. We're in a daily retracement. The 4 hours bearish, facilitating that daily pullback. So we're close. We're getting close to that region. I personally still think there's more downside to facilitate this area of inefficiency and imbalance. That might not happen. We'll wait and see. We're within the discounted zone, so price can shift from any point. But the only time I'm really going to be worried about the daily shifting bullish again is if the 4-hour has a break to the top side. Right now that's not the case, so we can expect price overall still to be bearish. But at some point we're expecting the M15 to shift bullish to facilitate the 4-hour pullback. Now if we go back to the 4-hour for a second, and I'm just going to mark the fib from the low, from the high to the low. Now if the 4-hour enters a pullback here, look what perfectly sits within this perfect area of inefficiency and imbalance and this unmitigated area of supply. So we could see the M15 shift over here to facilitate that 4-hour pullback for the next push to the downside, and the likelihood of the 4-hour pullback happening could be high because we mitigate a high time frame demand. So that's why it's about being cautious in expecting every M15 push to continue to the downside. Now I caught some shorts here and I caught a short here. Now why did I close 70% of my position here, move stops to break even? Purely because I'm anticipating a 4-hour pullback to come into play. So at some point the M15 is going to break to the top side. So this could be the move, and internally in this pullback we are still bullish because you can see we had a change of character, pullback, higher high, higher low, higher high, higher low, and then we had this marginal break above, and then we had a pullback and then we came here. So we could see that happen, but still higher time frame is still bearish. Price can continue down, but there's no guarantee because the 4 hours had a breaker structure, because we've mitigated high time frame demand, and that high time frame demand is probably likely to facilitate the 4-hour pullback. So you need to be mindful of these things. So you know, you've got to be very careful in how we kind of trade when price kind of gets into these regions. Now you could perfectly see internally had this high, had this pullback, marginal close above, and then we kind of came down. So now I've marked my fib within this region. Now if we get some strong rejection within this area, we could take a short to the downside, but that's still aggressive because internally we have not shifted bearish yet. And normally, if we're trading with the trend, you don't need the internal to shift bearish. But in this case, it's probably safer to do so because, like I said, if we're expecting the M15 to continue lower, the only time you can expect it to continue lower, and the high probability for it to continue lower, is if the 4-hour hasn't broken structure to the downside yet. But we can clearly see the 4-hour has broken structure to the downside. So the M15 downtrend has achieved its objective, which is to facilitate the impulsive leg of the 4-hour to the downside, which was this entire move here. So once it's done this, we can see there's our M15 high, low. So M15 has achieved that. So after a 4-hour break of structure to the downside, what can we expect? 4-hour lower low, lower high, lower low. So after a 4-hour lower low, we can expect a 4-hour pullback. Now, in order for the 4-hour pullback to happen, we're going to need the M15 to shift bullish. So be mindful of these things, and the fact that we've mitigated a higher time frame demand, which could facilitate that, and the fact that the internal structure is still bullish. So all of these things are super important, and you got to take those into account. So when I took this trade, you know, I could see that there's an area of demand resting over here that's unmitigated. So as this morning London Open came, as I saw this M15 bullish candle push up, I decided as this was closing, I'm going to close my trade because we are in so-called support and this consolidation, and internal we're still bullish. So there's nothing saying that price cannot continue higher. And over here on the M15, yes, it's marginal, but we did marginally close above. So all of these factors take into account. The last thing I want to do is be greedy, and when price comes down here, not close or take profits, and then what am I sitting at? What's that going to do to my psychology? I'm going to be like, shit, I was 77 pips in profit and I let it all go, and now I'm sitting at break even. And then most likely I'm going to close my position at break even because I'm fearful now. And then imagine price then does this, or it doesn't, and I leave it running and it does this. I've taken no profits and I've just let the trade reverse on me. So there's times and there's places where you should understand where you can leave a trade running, where you should take partials. You know, you shouldn't just be like, oh, because price is moving in some profit and there's this pullback happening, oh, I'm going to take partials. No, you got to have a realistic, logical approach of when you do these things and why you do them. The when and why are super important. Like, you know, if price came back up here and did this and stopped me out, I will accept it. But when we did this and we did this and we came down here, if from this point we shifted bullish, I would have closed my trade. Why? Because internally I'm not expecting price to shift bullish, at least until it comes down and mitigates the zone. So there's no reason for me to look to do anything at that point in time. That's the whole point of having a stop loss. Too many people move stop losses to break even far too quick because they don't trust their analysis and because they don't have a true understanding of market structure. And that's a super important part, you know. So like I said, you know, this could be a good area for trades, but again, you know, what we're seeing now, we're seeing this internal demand starting to fail at this region here. You could see supply is starting to kick in. So at least a good thing would be to let this internal low break and some sort of a retracement and then to start trading. But have the understanding that there's a probability that the 15-minute can shift bullish again. Now, I'm not saying that price cannot come down into this area of demand, but if you were to take a trade, then be mindful. I would be looking at definitely taking most of my profits off the table at this region here, because of what we're expecting potentially for the M15. So there's ways of thinking about it. Like I said, if the M15, if I was still expecting the 4-hour to create a new low and this M15 was facilitating that 4-hour low, then definitely, then I would be looking to trade here, and the only place I would look to take partials would have been, not even at this demand, would have been at if I mark my fib from this low to this high, you could see we have this region down here. We have an unmitigated area of demand over here. I would have been looking at taking partials at this point, but because of what I'm talking about on the M15, you've got to be very careful. You have to be very careful when it comes to these things. I'm taking some off the table here on AU. Why? Because it has mitigated that region, that discounted zone. Internal structure is still bullish, as I previously spoke. We do still have some potential downside to fill out this imbalance, but again, just manage trade, manage risk. Take care, Uncle. See, now at this point, there's our internal breaker structure. Until this pullback isn't complete, I'm expecting, I have no expectation of price now breaking above this high until we come down here, and then we could do this. But are we going to do that? We have mitigated the higher time frame like we spoke about, so realistically I am expecting this low to be taken. But because this is a demand zone, that could be a reaction point, and we could see a continuation from there. So I'll actually just let this run pretty close to TP on this. If anyone has any questions or any pairs you want me to look at, feel free just to drop them in the chat. Otherwise, I'm probably going to be off very, very soon. Nice one, Joe. Nice one. Stick to the plan. Simple. Don't need to overcomplicate trading. You know, and anyone that didn't see the reason why I took AU, just go back and watch the stream from earlier, from the beginning, and I explained it. Gold, we're getting some nice strong momentum. Like I said, the safer bet would be, guys, just see a break of this low and some sort of a retracement, and then start shorting, and then you could see some moves back down into like 1913. Hello, I'm Manha from your Discord. I had a question. Could you explain some key things that to look at when buying a stock? What's your checklist and how do you see a coming profitable trade? So, basically, it all derives around your strategy, and I give some free education out here. You can kind of see my thinking of when I'm trading. So whether you trade stocks or you trade indices or you trade crypto or you trade FX, I trade everything with the same strategy. I don't trade stocks as much, but when I did trade stocks, I use the same strategy that I use. The best way to probably explain it is, that's where, without sounding harsh or rude, I give the kind of free education here, and hopefully you can take something away from that. But that's where I teach all of that in my course. The course is there. That's who all the paid members are. I explain everything with videos and my thinking of what I look at when it comes to my entry model, my exit criteria, market structure. The super important thing is that having a true understanding of market structure. People think just seeing higher highs, higher lows, I know what market structure is. I can promise you most people think they know what market structure is, but they don't. They might know what market structure, yes, in isolation. You could look at this and be saying, oh, we're in a downtrend here, right? You could quite easily look at saying that. But if you don't understand everything else that's going on in and around this entire area, and even a bigger picture to this, then trying to just trade here in isolation is not going to be a profitable way of trading. So truly mastering and having a defined set of rules to understand market structure is super important. And then the strategy, quote unquote strategy itself, is more or less your entry criteria. That's your entry model. It's the strategy, is really an entry model. But the entry model is only as good as your understanding of market structure. Like if I'm taking a trade, if I'm looking to buy something at an area of demand, now if I just play price back here, for example, you could quite easily see, oh yes, we were here, we were in an uptrend. Oh, we have a nice area of demand here, right? And you say, right, okay, we're bullish, I'm going to buy here to continue pushing price higher. And then eventually what happens? You see some profits and then price goes against you, because not understanding what the wider time frame is telling you is going to be the reason why you lose significant amounts of trades. So it's really difficult to answer that question just in isolation for you, because there is a paid service I have, and so people pay for the in-depth stuff. But hopefully you can take away some learnings on the live streams for free of when I break my trades down and kind of give you my overview and my thinking without going into too much detail. Please look at Euro AUD if you have time. Euro AUD, let's look at Euro AUD. So Euro AUD, typical pullback into, we had resistance turned to support, and start to bounce off to the upside. So overall, I would be saying, where's price reacted from? Price has reacted from this area of demand. So we could still have some further downside on Euro AUD to come back into like 1.6 region. But what you'd want to see is a failure at supply up over here. We have an area of supply here. So you could see we shifted. We had an internal breaker structure here to the downside. We then shifted bullish. So we had a change of character up over here. So we had a change of character over here, and then you could perfectly see price came back into this area of demand, pushed off, We then had another breaker structure here, internal breaker structure here. Push up, perfect pullback into our fib and into demand. We then had another breaker structure here, and then we pulled back. Did we come back into? We did. We came back into equilibrium at least. So currently structures perfectly maintain it. So I would personally say if we can continue to see this and then see a shift, then start to short. Then start to short. How long did it take me? I spent an awful lot amount of time on the charts. Probably like 7 to 8 hours a day, if not more at times. I think it took me to truly understand a system with a clear set of rules and see profitability in demo and have the confidence to start trading live was probably about 7 to 8 months. But that was me being very disciplined. And not just chucking money in a trading account and just thinking, oh, I know it, and start to blow money. I was pretty disciplined when it came to that. But again, you can confuse yourself with watching loads of different videos on YouTube and lots of different places. I'm not saying those things don't work, but you need to have a defined set of rules that you don't add to, you don't start taking away from, and learn it, understand it, and then back test it and have results. Take trades in demo, learn your strategy, and once you have a big sample size of results over a substantial period of time, then you can look to start trading in the live markets. But before that, you absolutely want to learn. So yeah, Joe, yeah, so we have seen price here break above, so we could just see a continuation of price continuing high into that point. So we are reacting to we are facilitating that pullback on the hourly from this area of demand. So I would see if we get low time frame rejection back up in like 1.63800 region, then we could continue pushing down to facilitate the pullback off of this move here before we see the next push up. No worries, Chase. You're welcome. No worries, Joe. Right, guys, any other questions, any pairs, anything? I've been on for an hour. Don't plan on staying on much longer, so feel free. If anyone's new here, the Discord link is in the description. It's free to join. And if you want to have a look at my thinking, just go back on the stream and you can watch it to see what my views are on the pairs that we've been speaking about. honestly, if I can give you the best advice, supply and demand zones are pretty straightforward. It's aggressive buying and aggressive selling, you know. So anywhere there's strong buying pressure with imbalance, where there's like a gap and you see like big candles, that's an area of demand. And then supply is the reverse, strong selling pressure that breaks structure is an area, is a supply zone. So, you know, if we just go on to like a higher time frame, like here to the left here, you could see we had this huge selling pressure here. We broke structure to the downside. There is our area of supply up over here. But I would not focus too much on supply and demand, because again, if you look at supply and demand in isolation and you don't really master market structure first, you're just going to be all over the place, you know, because you could see this was a strong area of supply, but once price tapped into it, all it did was react from it. And then what did we do? We continued pushing up. Why? Because at that point the pullback here was complete. So this area of supply isn't really going to do much, because the overall momentum of the market is to the top side, because price is looking to break the previous daily high. So supply and demand is probably the simplest thing to learn, but you only want to start focusing on supply and demand once you truly have an understanding of market structure. Because most people that trade supply and demand, trust me, in isolation, it doesn't achieve anything. And again, what did we say about Euro USD? We were talking about it when price was here, saying where is price heading? No worries. And again, the best advice I can give you is, you know, if you're just gonna learn it on the free, which is absolutely fine, you know, there's nothing wrong with how you want to learn it. Focus on a certain section and work your way through things. Obviously you're going to have to just find things and try to learn things as you go along. The opportunity of learning from a course, and it doesn't have to be mine, it could be anyone's, is the fact that if it's a proven system, everything is there, and you're not having to go in different places to find different ways that people perceive the market. Because remember, you have to have the mindset of looking at the markets with a mechanical perspective, objective. You can't be emotionally attached to a bias and a certain way of looking at the market, because that's where most people fail and go wrong. You know, you have to be like a robot when it comes to the market. You have to look at it from that mechanical viewpoint. And if you don't have a certain way with a certain set of rules, the way you perceive the market and look at the market, then emotions will always kick in and you'll do things on emotion, which in most instances you fail. But however you decide to do it, focus on market structure first, and then try to work and find a way that allows you to have a defined set of rules, which is an entry model, and then put market structure, entry model, everything together and start to backtest that and see what results you get. Based off of your results is what should give you the confidence and the ability to start executing in the live markets. That's just my advice. You know, how you go about it is up to you. I'm going to use the stream as a podcast. Great, you know, it's education. You know, that's why I'm pretty sporadic with my streams. I don't stream for a specific reason. You know, I do it just to give value so people can take stuff away and learn from it, and it's as and when. No worries at all. Listen, we all start somewhere. We all start somewhere, but you know, the advice is only there because a lot of people do fail, and that's the main reasons they fail, because they jump around too much. They watch lots of different videos from lots of different people who have their own rules and their own ways of trading, and when you start to merge different things from different people and try to combine them and try to do stuff, you don't know what the results are going to be, and you can't guarantee that, you know. And you got to be disciplined enough that if you find a process and a way of trading, you stick to it and you see what results that gives you over a longer period of time. And then if it doesn't work, then you can kind of start to change it. But too many people trade a certain way and then they lose a couple of trades and they're like, oh, this doesn't work, and they're moving on to the next thing. But you don't realize that no strategy is 100%. You know, you'll be lucky to get a strategy that gives you like 50-60% win rate. You don't need a high win rate strategy, but you'll be lucky to get something like that. So even if you do get a 50-60% win rate strategy, that means that at least 40% of the time you're going to lose. So that should be expected. It's just the nature of the game, and that's where risk management comes into it. You know, like this gold trade I took, you know, it was a 4.3R, so it's 4%. I was risking 1% to make 4%. So great, I made 4% on this trade. Now, if I take my next trade and I lose, I know on most cases I'm only ever going to risk 1%. So I'm losing 1%. But if my average is 4 or 5%, I can lose 4 or 5 trades on the go, which is highly unlikely. And I just need to win one trade to be back at break even. So all of these things play a part. Right, everyone, well, listen, it was a good stream. We were on for like 74 minutes. As I mentioned before, if you haven't joined the Discord, the link is at the top of the chat, is pinned, it's free. If you are in the Discord, you have any questions, just drop them in the chat. Trade safe, be good. There's not much news. We only have FOMC minutes at 7 p.m. or 7 p.m. UK time for me. But apart from that, yeah, hopefully you enjoyed it. If you've not subscribed to YouTube, do so, and I'll catch you guys on the next one, whenever that is.